Great to have you on the show. Now, first things first, the MPC decision came out yesterday. I'd certainly love to know the impact it had on our bond markets, on trading on our bond markets. I know that before the decision came out, we saw traders adopting a cautious approach. What is the market doing now?
Yeah, good afternoon, Uche. Thanks for having me on the show. I don't think there was anything particularly surprising about the MPC decision. So in the absence of any unusual decision from the committee, markets have resumed as normal with marginal differences in prices between yesterday and today.
Right, okay. Well, that's certainly a very short opinion there. But let's talk about investors going forward. I mean, one thing that Kubi mentioned yesterday is that investors are more interested in stability and definitely not the MPC decision, not the CPI numbers, and stability in our overall economic landscape. What's your take on that?
Well, I mean, for a country that is virtually reliant on oil for government revenue and exports, stability almost invariably means stable oil prices. But again, nothing really has changed in government policy outlook in the past, recent past. And as long as there are no sudden departures from the current course, I think everybody should be happy.
Now, Egie, we had a DMO auction today. We saw 60 billion naira bonds auction compared to 75 billion naira last month. Now, you feel that this DMO seems to be reducing the size on offer rather than increasing to take advantage of lower rates. Give us your take on this.
Well, I think it's a bit interesting. If you compare to the end of 2010, end of 2010, very low rates, DMO ramped up their issuance very substantially in the last 4 months of the year, and almost double their issuance over the previous 4 months. In this case, we are seeing almost the opposite, with the DMO phasing out the 10-year or that specific 10-year maturity, and rather than increasing the size of what is issuing to try and reach 75 billion or more to take advantage of lower rates, they've dropped back. That might be partly because of the overall borrowing requirements of the government, where we're hearing about some other foreign loans or other non-bond-related borrowings that the government is relying on. Also, strong oil prices and rising foreign reserves means that they need to borrow slightly less than was originally projected.
Now, Egie, on the contrary, very quickly, we're seeing also, when we look at the Q4 T-bill issuance calendar released by the CBN, we're seeing total issuance across maturities going up.
I mean, if you look at that calendar, the total amount maturing and the total being issued is virtually the same. Maybe it's out 13 billion. So all they're really doing is recycling what's maturing and just reissuing the exact same thing. Most months have, or most auctions have virtually the same amount maturing and being reissued. So there isn't any significant increase there. Maybe it's about 13 billion over the quarter.
Well, Egie, let's talk about your outlook for the coming weeks. Certainly, we're expecting an auction tomorrow, a treasury bill auction of 101.22 billion naira. What are your expectations for that? And certainly, your expectations for how the market will perform. I mean, traders say we're going to see liquidity levels increasing, of course, on the back of the expected disbursement of the budgetary allocations.
Well, in terms of those auctions actually took place today. There was a DMO auction today and there's a T-bill auction today. But I think settlement for T-bills tomorrow, DMO auction is probably on Friday. I mean, what we're seeing is, in terms of the T-bill auction, we're hearing about 12 and 12.6 for 91 and 182 days, which is a slight uptick from where the secondary market closed. But it shows that clearly there's a lot of liquidity out there, partly from the matured T-bills which were being reissued, but from investors who are still seeking treasury bills as a good source of investment.
What are your thoughts again on inflation? I mean, we're seeing the inflation number continue to trend downwards, and you know, analysts are saying we might see the numbers reaching single digits in the second half of this year. Could we see yields going that direction as well?
Well, I mean, single digit inflation is almost, I mean, I don't know when last you had sequential months of single digit inflation in Nigeria. I don't think it's happened in the past few years. So I think that's going to be a tough one to pull off. But again, that has, up to a point, not as much impact on yields as you will think. I mean, inflation did go down, but if we go by what we're hearing from the DM auction today, we are hearing rates have gone up to close to 13%, 12.9 and 12.93, compared to where secondary market closed. So you would have thought that with the secondary market closing at a certain level, and inflation having improved, you should not be seeing an uptick in FGN government bond yields, but that's happening. The two of them are not as tightly correlated as we will think. Particularly if you go back to 2010, there was no relationship between inflation and government bond yields.
Right. Okay, well, that's an interesting take there. Egie, thank you so much for joining us. Egie Akpata,
Thank you.
Head of Debt Capital Markets at UBA.